Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. As always, we need to remind you trading is a risky endeavor and not suitable for all investors. We just had our third book released this past week, The Secret to Trading, Risk Tolerance Threshold Theory. We're awful proud of that. It's always good to have a book behind you. Let's get to the markets. The first market we're focusing on is the Australian US dollar. We're focusing on the short side right now. We're aware you have these longer term patterns are bullish. However, that day-to-day is down. The day-to-day very important for us as a swing trader and as day traders. In fact, that's the most influential pattern for us when we trade these lower time frames. So that's why we're more interested in the short side right now. Let me scroll down to the 4-hour chart. We're much more interested in sell signals than we were in participating in that counter trend rally higher midweek. That'll be our focus going into next week, the short side in the Aussie. It's not to say that we're overtly bearish on the market, but we see that we're a ways above support. We think that's where the market's going. We think 101, probably outside shot. You see par here. So, there's some room here. We're at 103 right now. There's some room for swing traders and shorter term traders on the downside in the Aussie right now, we feel. Next market, the Euro US dollar. The Euro is still hanging tough here. We talked about this last week where, hey, this is still a higher low right here. No matter how you want to look at that correction, it's just that a correction. It's on par with these previous corrections, right? So the pattern is still bullish here. And if anything, this is what we talk about in the book. The secret to trading is recognizing that repetition. And here it is. The market bottoms. You're just taking advantage. Traders are just taking advantage of these higher lows, higher low, higher low. So until you break that pattern, you just have to keep going with it. We're still rather bulled up on this pair. We need at least a double top before we're going to go in on the short side. Preferably, we get into this primary pattern resistance up here. We're kind of referring to that as the barbed wire up there. A lot of resistance, 138 on up. We'd like to see it get up there. In fact, we think that longer term, pan out to a weekly chart, we see this entire move as a counter trend move. We see this as the predominant pattern, the primary pattern down. We see this as a counter trend move. We're really looking forward to potential sell setups in the near future. You don't want to jump the gun, though. We think possibly getting short here would be jumping the gun. So we'd rather, once again, we'd rather still sell a rally. Give me at least a double top here. Now, if it were to break down and close below that green line a couple times, close below 32 and 2/3 or so, 32 and 3/4 or so, get a couple closes below it, I'll review it for the short side. But for now, if anything, we're still neutral to bullish on the euro overall. Here's your 4-hour chart. Here's one where I really don't want to scroll down too far because you'll start thinking, oh, there's a downtrend. Now you got to focus on the big picture. So there's support. You can see just above 32.5 or so. So we see support to just above 32.5. You'd really have to bend it pretty good. Get below there a couple of times before we'll consider the short side. So we're still fairly bullish on the euro overall. So we're focused on the short side in the Aussie, still focused long side in the euro. Next market, dollar, pound dollar. Boy, they really knocked the pound down pretty good. One of our clients, a couple of the clients were having a good time in here. Friday was a great day. It was 2 days in a row. It was actually the same time, both days in a row. One of the guys Skyped me. He said, hey, I'm liking this pound. Look at that sell setup in the pound. Thursday and Friday. It was like the same time, the same message came in. Hey, look at it. There's another one. So our clients were enjoying the downside in the pound. We knew once this level gave way, secondary pattern actually gave way, that opened the door to the downside, and we see more downside here. Longer term, as we talked about last week, the pound is more sideways than not longer term. Let me move these guys out of the way so we can see this. You've got big time support down here. You've actually have support all along the 2011 and the 2012 lows here. So that's a big level. You're not that far off. Momentum is down right now. You're headed that way. 157 and 152 and 3/4. Maybe they have pretty good support down there. You've got a little bit of room on the downside, but I think you've got to hit the bricks here unless something panics. I don't see a panic here. I just see essentially one big sideways market, and you're going to go down there and test the bottom of it. You're going down a little bit further than we thought, but that's all right. We think, overall that this market will hit the brakes down there, as I said, around 52 and 3/4 or so. But for now, there's, as our clients realize, there's room below, and they were enjoying themselves. They were sledding downhill last week in the pound, going with the flow. That's the key to it, going with the flow. Next market we'll take a look at is dollar yen. A lot of talk, a lot of chatter. What's going to happen if this guy corrects? Well, hopefully we get a little bit of downside. It'll be interesting to see. We think you have a secular bull market. Our long-term target is par here. If you do get a correction between now and then, well, we would think that would be the likelihood. We'd rather be patient and just wait to buy the dip rather than focus on trying to participate on the downside. We'll have to see. You did put in, well, I spoke to someone. I was going to say that's a lower low. It's not. That level held. Actually, one of our other clients was Skyping me. He had a good time in there on the shorter time frames, buying the dip in there. And, that's the secret to trading, repetition. It really, really is, regardless of what you think. If a market's gone a long ways, you don't think it's going to go much further, well, you don't want to go in there and pick a top. If anything, you want to keep going with it. So every time you get that counter trend line break, here, literally here, every time you get that counter trend line break, if you would have taken that buy signal, you could have done very, very well the whole way up. And that really is the secret to it. Markets tend to be very repetitive, so don't argue with them. Go with the flow. So from our perspective, this market's still pretty bulled up here. That's a 4-hour chart. Going with the daily now, I understand, it may be long in the tooth, but nonetheless, it's still looking good from our perspective. Maybe you put in a potential short-term head and shoulder top and we see a little downside. We would actually see good support at 90. If you do get a pullback, we think 90 will hold. But from our perspective, there's nothing to do right here, right now. Let's look at the Dollar Chief. We don't normally cover the Dollar Chief. I think Dollar Chief's getting ready to put in a low. In fact, it held that key level for us. That's a big level for us. That's primary pattern support. It actually held. Primary pattern's still up. There's primary pattern support. It held. It looks good. Boy, I would look at a double bottom there. If we get a double bottom, or we don't even need a double bottom, if we just come down here and put in a higher low, that will complete a head and shoulders, right? Here's the head, here's the left shoulder, right shoulder. Look for that right shoulder. Look for any kind of bottom formation in this area, and that would be pretty exciting. So we're getting bulled up on Dollar Chief right now. Look forward to seeing some dollar strength here. Look forward to that euro topping out. We think we're going to have a lot of fun when that happens. I mean, that's really exciting. Hey, let's look at the gold market. I'm pretty good with these currencies. The gold, it's a different animal. Commodities are definitely a different animal. I started out in commodities, and no surprise why I migrated to currencies. Financials a little bit more predictable than these commodities. I had pretty good support here. I would have thought that would have held up. We would have got a bounce out of there. Doesn't matter what I thought. You have to stick with the method. The majority of patterns were down here overall, and that's where the market's heading. Gold could be in for a test of that 15 and a quarter, those 15 and a quarter levels, the 2012 lows. Keep an eye on that. Not a market for the faint of heart. You're going to have some pretty big swings in here. For our money, I've got to say it, we got to be selling rallies. We've got to be selling rallies at least till you get down at 15 and a quarter. One thing I could almost guarantee, if you get to 15 and a quarter, they're going to press the lows. They're going to knock stops out below those lows. They're going to look over the cliff. They're going to have traders looking over the cliff, meaning you're going to see a lot of long-term gold buyers, a lot of long-term gold bulls panicking out of this market on a probe below 15.20, 15 quarter here. We think potentially that'll be a good opportunity to get back in line with the grand pattern, with that long-term primary pattern. Here you can see it on the weekly. So, this move below 1620 really opens up the door to the test of the 2012 lows. If you chip away, if you probe a little below those lows, you're going to knock out a lot of long-term buyers, a lot of long-term holders of this commodity, and we'll have to take a serious look at it then. Boy, the gold bulls are really they're really not happy right now. They're really lamenting hard times. Gold's like it's almost like the poor man's stock market right now. It still trades back and forth. You know, you still get the corrections, you still get the panics. But we think if you do get a panic out of the way, then this guy will be one that you'll want to go in. You know, we think it's a pretty good trading vehicle. Still like the currencies though. Speaking of other markets, here's your U.S. stock market. You know, this is one we were cautioning you last week. I was saying, hey, people keep asking me, hey, when is this guy going to correct? I don't know. We don't play corrections. We'd much rather play the trend. So as far for my money, that's a pretty smooth trend, isn't it? That's a pretty smooth looking trend. So, you know, this would almost support the continued upside in the euro also. We do think when the euro finally does top out, though, that you'll get a good spill-off, good correction, probably even reestablish that long-term primary pattern down in the euro that we looked at, and we think that'll be the time for a correction in the U.S. stock market. We'll have to see. As always, we appreciate your time. If you want to know more of what we do on the education side, there's the Trading University site. You get an awful lot for your $199 a month, including the one-on-one mentoring, that online Skype community. The guys love that. They really do. You know, you can go back and forth and see what other guys are looking at, and these guys are getting good too. They're pointing things out as they're setting up, and that's the whole goal of it, to really help each other out. It helps me out too. If you want to perhaps get things going a little bit quicker, you can get enrolled in the master's program for free. You don't get the mentoring, you don't get the chat group, but that's a pretty good way to go about it. If you open a live account with Forex.com, FXCM, Handtech, or Open Econ, the future side, you receive the master's program for free. For details of that, come and see the site eostrade.com. Hey, thank you so much, and we'll catch you again next week.